Now guys, I am going to discuss the agenda of this S&P 500 weekly technical analysis, and one more thing. Okay, let me tell you very well in advance that we are anticipating a reversal. Okay, now where the reversal will be seen, from what levels the reversal will come, and to what level it can be seen, and then okay, the resumption. So this I will cover in here and here. Okay, these are the three parts. So the first point of the agenda is the S&P 500 technical analysis on the weekly chart, because the S&P 500 has closed below 4333. Okay, so this is a significant closing in the S&P 500 on the weekly chart. That is why we are expecting more bearishness, but with a reversal and then a counter reversal. Okay, I will discuss this more on this weekly chart, and weekly chart means the Hawkeye view. Okay, the big picture, right? The second point of the agenda of this S&P 500 technical analysis is the FOMC, Federal Open Market Committee, about the decision and the projections, and why the entire stock market reacted heavily to it. Okay, and other than that, the press conference of the Federal Reserve Chairman. Okay, this is the most important part. Although I've given a detailed analysis to my Patreon community members, okay, but to everyone, okay, I will discuss here, okay, in very brief, okay, the press conference of the Federal Reserve Chairman, so that you can also be on the same page, okay, as of my Patreon community members. Then the third point of the agenda is the S&P 500 technical analysis on the daily chart. So daily chart, you are seeing that this is the 200-day EMA. Okay, S&P 500 is approaching towards this 200-day EMA. However, the S&P 500, okay, it is expected to take a U-turn in between, okay, the 200-day EMA and the last closing. Okay, that I will discuss more in detail. Other than that, the technicals, as of now, the S&P 500 is true bearish, and this has happened after April 2023. Okay, so now S&P 500 is true bearish. I will tell you the meaning of true bearish and how it is going to work. Fourth and the last point of the agenda is the probable movement of the S&P 500 from September 25th through September 29th. Okay, I will tell you that how the S&P 500 is going to behave, how the S&P 500 is going to move, not just the S&P 500 but also the Dow Jones and the Nasdaq and QQQ. So guys, from this week onwards, okay, I will divide the probable movement in two parts. Two parts means that there will be this, the one part that I will discuss in this, the S&P 500 technical analysis. This will be very brief, okay, to all. The second and the exclusive part will be only for my Patreon community member. That will be the detailed probable movement, okay, as I used to give earlier, okay, in all of these, the S&P 500 weekly technical analysis. So guys, before I proceed further, I would like to add a disclaimer to this S&P 500 weekly technical analysis, that the content in this video and or in this YouTube channel is for informational purposes only and does not constitute and should not be construed as investment advice or a recommendation to buy, sell, or otherwise transact in any investment, including any products or services, or an invitation, offer, or solicitation, or to engage in any investment activity. Guys, now before I discuss the first point of the agenda of this S&P 500 technical analysis, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel. And on my website, every weekend I publish these the daily S&P 500 updates and analysis, okay, which I have posted to my Patreon community members in the previous week. And if you want to get these the daily updates, the daily analysis of the S&P 500 from Monday through Friday, then you can join my Patreon community. And I've given the link in the description of the video and also in the comment section. Now guys, I'm going to discuss the first point of the agenda of this S&P 500 weekly technical analysis. And in this, the first point of the agenda, okay, I will tell you what is happening on the weekly chart of the S&P 500. And not just on the weekly chart of S&P 500, but also on the weekly chart of the Dow Jones. Now let's first interpret the candle itself. The candle, it's a heavy bearish candle. Okay, and the closing was almost equal to this, the low price. Okay, this simply indicates that there are bearish sentiments, okay, and any reversal will be limited, and then again there will be a fall. Okay, as simple as that. Now other than that, if you notice that the S&P 500 on the weekly chart has closed below all of these the moving averages, right? This further indicates that there is heavy bearishness or heavy weakness in the S&P 500. Now the question is that where the S&P 500 is heading to. Okay, so the long term picture says that the S&P 500 will be heading to the 55/85 levels. Okay, but that is the long term picture. Okay, but before that, as of now, we can say like 4291. Okay, that is very likely to be seen, okay, in this the S&P 500, right? And then between 4291 4185, okay, there are many other levels. Now this was the candle. Now let's see what the technical indicators are saying on this, the weekly chart of S&P 500. As of now, if you notice, then S&P 500 is the good thing is that the MACD and the stochastic RSI both are bearish. This means that the trend is bearish, okay, clearly. Other than that, the moving average is neutral, okay, Ichimoku positive, and this also we can say that on the weekly chart. Okay, on the weekly chart, the S&P 500 is 60% bearish, okay, and 40% bullish. Okay, but on the daily chart, okay, I'll show you on the daily chart through the technicals that the S&P 500 is 100% bearish. Okay, means true bearish, right? So until and unless, okay, there comes a confirmed bearish crossover in the moving averages on the weekly chart, okay, there will always there will always be, you know, some you can say like fear for the bears that the S&P 500 can take a U-turn, okay, a surprise U-turn, okay. And yes, technically there will be a U-turn, but that U-turn will be limited, okay. But the problem will be that if that U-turn breaches some of these critical levels, okay, then that will be the problem. Otherwise everything is good, okay. Now a U-turn means a bearish means a bullish reversal, okay, that is there in the picture. So as of now we have seen one more thing, okay. So this thing, okay, that is going to work in favor of the S&P 500, okay, bears, particularly bears, is that the stochastic RSI is bearish and then the MACD is bearish, okay. And as I mentioned, this is the concept of many a times in my all of these S&P 500 technical analysis, that whenever the MACD and the stochastic RSI are aligned in a particular direction, then that direction becomes the direction of the stock index or the entire US stock market, or any other stock market, right? As of now that is the case. And so as of now the reversal we are anticipating around, you know, these levels, okay. The exact level is not known as of now. That will be known only when the S&P 500 comes into the session on Monday, okay. Then only the exact level, whether this will be 4,800, sorry, 4,308, 80, 82 something, or 44 something, or you know, that exact level will be known only when the S&P 500 comes into the session. So if you are my Patreon community member, then I'll inform you, okay, as early as on Monday, that what will be this the level where we are anticipating this the reversal, and then again, okay, this the fall. Guys, now I'm going to discuss the second point of the agenda of this S&P 500 technical analysis, and this is very important, okay, because this the FOMC and the press conference of the Federal Reserve Chairman, okay, this is, so this simply, okay, the press conference and the FOMC, this has changed the direction of the entire US stock market, and its impact will be seen, okay, in the coming weeks and months, okay. So that is why this is very important, okay. So this all, okay, it started here, okay, FOMC decision. So the decision was to maintain the target range for the federal funds rate at 5.25 percentage points to 5.5 percentage points, and the entire US stock market, okay, so there was like 99% certainty, okay, that the entire US stock market was expecting that there will be no rate hike. However, in my previous S&P 500 weekly technical analysis, I have said that there are two things. Number one, that through all of these, okay, I was considering that there are 70% chances that the Feds will raise the interest rates, okay. But if the Feds do not raise the interest rates, then the Federal Reserve Chairman will go bearish, okay, in his comments, okay, in his speech. This means that either Feds are going to raise the interest rates. If not, then the Feds will go bearish. These two conditions were there. So yes, I accept that there was no this rate hike, okay. So this first part, it did not work, but the second part, the bearish part, okay, it was there, okay, as was anticipated, right? So yes, here the Feds have decided, okay, this the pause. Now one more thing, okay, that if the Feds have given, okay, means if the Feds have gone for this the pause, okay, then why the stock market has not reacted to it, okay, it means in this the bull side, So so in my pre-market update, okay, that I gave like 1 hour before the open of the stock market, okay, I have informed my Patreon community members that, see, if the Feds decides to not to raise the rates and go for a pause this meeting, then the S&P 500 is not expected to give much movement, because the reason was that the S&P 500 and the entire USA stock market has already considered this a pause and have already priced in that there will be a pause. That is why we have seen this, the bullish movement, the bullish reversal, right? Even before this thing has happened here, okay, its reaction was seen here. This means that it was very much clear that if the Feds go for a pause, in that case there will not be much movement or much reaction, just okay, a sharp immediately upon immediately after the after this information is published, just a sharp up down, and then it will settle. Now comes this the most important part, that was of FOMC economic projections. First thing was the federal fund rate. Okay, fine, this is okay, what was there. And one more thing that was clear is that the Feds have confirmed that they are going to raise, okay, the rates one or two times in the next 3 months. Next 3 months means there will be only two these FOMC, okay, meetings, the Federal Open Market Committee meetings. One is in the month of November, and the other is in month of December. Okay, there is no FOMC meeting in the month of October. Okay, so now the Feds have decided that yes, they are going to raise the rates. Okay, either they are going to raise the the entire market. Okay, so market means the global market has considered heavily that Feds will raise the rates in the next meeting, that will be in the month of November. Okay, December, as of now it is not clear whether they will raise the rates or not. Okay, but in the month of November, okay, that will be there. Now the most surprising part was that the Fed's projection on the funds rate was 3.9% to 5.9%. This was last month, in the month of July. Okay, in the previous FOMC. Okay, for the year 2024, that this will be 3.9% to 5.9%. Now these projections have increased to 4.4% to 6.1%, indicating that first of all, these are rate hikes. First of all, these are rate cuts. Rate cuts that will be there. These rate cuts will not happen, okay, in the first or the second quarter. The rate cuts will come in the quarter 3, okay, or maybe in the quarter 4, and there will be very few rate cuts, 1, 2, or 3, okay, or maximum 4. Okay, depends, because earlier the stock market was expecting more rate cuts and early in quarter 2 of 2024. But this time, because the projections have increased, okay, from 3.9% to 4.4%, 5.9% to 6.1%, this means the rate cut number. Okay, number two means that as of now the stock market was anticipating that the Feds will not go beyond, okay, 5.6%. However, here the projections, okay, have increased from 5.9% to 6.1%. This means that if needed, then Feds will go beyond 5.6% to 5.9% and maximum to 6.1%. Right? This was the critical thing. This critical thing has brought down the market, has, or you can say like pulled down the entire US stock market. That now, because earlier they were expecting that Feds are not going to raise the rates, it was going bullish, Feds will go pause and rate cuts and all, and then once the federal chairman has confirmed, it came down. Then again they were anticipating a pause, they have given this the bullish push, but now it was confirmed, okay, the pause but with bearishness. Then further the Feds have confirmed, okay, this particular thing, projections. So this simply brought down the stock market, right? I hope this part is clear. Now other than that, employment, okay, course, PC, okay, etc., this was there anyways. Now so the press conference of the Federal Reserve Chairman, this is what I was giving in the real time, the interpretation of the press conference to my Patreon community members. Okay, the very first thing was there. Okay, so this might look boring, okay, press conference and FOMC, but this is actually what drives is the entire US stock market, right? That is why you must be very well aware of these things. The most important part of this was that inflation is still well above target levels and will take time, significant time, to come down. Okay, and prepare to raise rates further if needed, and will keep the rates there for some good time until inflation eases. This means that this more than 5% rate, current rate is 5.33%. Okay, they are ready to raise this the interest rates, and then will keep the rates at these levels, okay, for many months. They will simply break the economy, or will push the economy into the recession, right? Now economic activities are much stronger than anyone the Feds have anticipated, okay, and which is why Feds can't say that there won't be any more rate hikes. Then stronger economy means Feds have to look into the rates. Now the most important part here was the neutral rate. The neutral rate will be higher than expected rate. As of now, Feds have not reached to the neutral rate, and to your surprise, okay, this the movement that you have seen from March, okay, March onward, it was 3,900 something, then we have seen 4,500 something. This heavy push in the S&P 500 and in the entire US stock market was based on the neutral rate, because earlier the stock market, okay, the market movers, the market manipulator, they were thinking that the Feds have already reached to the neutral rate. This means that there is a very little scope that the Feds will raise the rates, and Feds will go for a pause and then the rate cuts. That was the reason we have seen very heavy bullish movement. And now the Federal Reserve Chairman himself multiple times have confirmed that neutral rates are not what you were thinking or what the market manipulators or movers were thinking. Neutral rates are still higher than the anticipated or the expected rate. And as of now, the Feds have not reached to the neutral rate. So neutral rate is the rate when the Feds can say, okay, comfortably we have reached to this point, and now there won't be any more rate hikes, or maybe just one or so, and now there will be only pause or the rate cuts. That will be the neutral rate. Okay, this particular comment on the neutral rate, okay, this has pushed, okay, means the sudden fall that was there. Okay, then everything was there, soft landing and rate hikes, and this, okay, good growth means higher interest rates. Okay, stronger economic activity means Feds will be forced to do more, okay, with the rate hikes, and this was there. And for the stronger economy, okay, out of many explanation, one possible explanation is that monetary policy wasn't restrictive enough. Okay, but now with the higher interest rates, it is rebalancing. After the great recession of 2008 2009, okay, we have seen then from year 2010 onwards, okay, until 2022, okay, the monetary policy, it was not that strong. Okay, there were these the rate hikes, okay, or the interest rates were normal around 2%, okay, 2.5%, and sometimes like 0% or so. Okay, so that is what the Federal Reserve Chairman has confirmed, that stronger economy, okay, one of out of the many explanation, one possible explanation is that the monetary policy wasn't restrictive enough, okay, in last 10-12 years, and now they are raising the rates and they are simply rebalancing this thing. So now in my final update, okay, again I have confirmed that now the neutral rate will be higher than anticipated, and this will be the thing, and go bearish. Bearish is the trend, okay, and true bearish will be seen. Okay, everything will be there, and true bearish will come. Okay, and a gap down. So we have seen a gap down open. Okay, this was there as we were anticipating. Okay, a gap down open. Okay, it was there, and because of this gap down, okay, everyone has booked their profits. Okay, it was there. So guys, I hope the FOMC, okay, decision and the Federal Reserve Chairman press conference is very much clear, and now you know what is the future, what is expected to happen. Okay, means I'm not saying in terms of numbers, but now you know bearishness, bullishness, okay, that particular thing. However, the entire stock market, okay, it will trade through the technicals. Okay, the technicals will take over the levels, okay, the saturation, reversal, everything will come through the technicals. And for those who are not much aware about the technicals and who want to learn about the technical movement, the technical indicators, then I have this the program, that is the Stock Market Knowledge Transfer Program, or S&P 500 Knowledge Transfer Program. Through this program, okay, I teach the movement, hacks, strategies, trend analysis, manipulation, technicals, predictions, support and resistance levels, and much more, right? And the motto of the program is that give a man a fish and you feed him for a day, and teach him how to fish and you feed him for a lifetime. This means that the purpose of this program is to make you self-reliant and self-confident so that you can trade yourself. Okay, So this is the spreadsheet. More details are there in this the spreadsheet. This is my email address. Okay, whenever you want to participate, okay, this is my email address. These are the 3 levels. Okay, and this is what I cover in each of these the 3 levels. So this is again the link to my Google spreadsheet, and in my Google spreadsheet you will find that what in detail, okay, I am going to discuss and I am going to teach you. And terms and conditions are there. Okay, snapshots, okay, of the participants, okay, who have participated in this program, right? So guys, this is and if you have any questions or if you want to participate, then this is my email address, and I've also given this the same, okay, in the comment section and also in the description of the video. So guys, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel. And if you want to join my Patreon community in order to get the daily analysis, the daily updates from Monday through Friday, then I have given the link in the description of the video and also in the comment section. Now guys, I am going to discuss the third point of the agenda of this S&P 500 technical analysis. And the third point of the agenda is the S&P 500 technical analysis on the daily chart. This is the daily chart. In the first point of the agenda, we have discussed on the weekly chart. That was the weekly chart. Okay. So daily chart means that the one candle represents one day. Okay, not 1 hour or 1 week. One candle means one day. Okay. Now, so first, okay, let's look into this the candle. If you look into this the candle, it's a bearish candle. There is no defined shape, but it's a good and heavy bearish candle indicating bearish sentiments. Okay, as simple as that. These bearish sentiments can bring in a gap down open on Monday, or irrespective of any open, okay, some bearish movement, right? Now this thing is subjective because of one important technical factor, okay, that I'll discuss here. Okay, so I hope this the candle is clear. Now when you look into okay, one more thing, let me tell you that when you look into, okay, yeah, all of these are technical indicators and everything, okay, here, then the S&P 500 is 100% absolute bearish or true bearish. So what does it mean, okay, the true bearish or absolute bearish? It means that now the bearish movement will be there, just like, okay, we have seen this a bullish movement. The bearish movement will be there. Intermittently there will be some reversal and then again the bearish movement. Like this was the bullish movement, okay, bullish movement, and then intermittent there was some reversal and then again the resumption of the bullish movement, then reversal, then again, okay, like this. Now in this case it will be down, up, okay, this kind of movement. That is the true bearish movement. And this does not mean that every day you will see red candles. No, sometimes you will also see green candles, but most of the times, okay, you will see red candles. This is clear. Okay, that is the meaning of true bearish movement. And also one more thing, that any reversal will be an opportunity to go bearish. Okay, any reversal will be an opportunity to go bearish. This also means, this is also the meaning of the true bearish movement. However, as of now, okay, if you have some knowledge about the stochastic RSI, or if you are my Patreon community member, then okay, then you know this thing very well. Stochastic RSI, okay, there are these two things. One is K channel and one is D channel. Okay, D is the moving average of the K. Whenever the K becomes 100 or the K becomes 0, okay, it says that now there is 100 means overbought condition, okay, 0 means oversold condition. Okay, now if the D also becomes 100 or if D also becomes 0, then this thing, okay, this particular overbought or oversold condition, okay, in layman terms, okay, or in technical terms, this is overpriced or underpriced. Okay, so in layman terms, it is overbought or oversold. When K and D both becomes 0, or when K or D both becomes 100, in that case, this is a condition that technically will push the price in the opposite direction. If it is overbought, it will give up. If it is oversold, it will give a bullish reversal. Okay, clear? Now, in the present condition, the thing is that the K channel is trading at 0 continuously for 2-3 days. Okay, the D is not 0, but it is very, very close to 0. This means that if there comes a gap down open on Monday, or if there comes a gap up open, but after gap up open, if there comes a bearish movement and the S&P 500 crosses 4320, okay, in that case what will happen? In that case also the D channel will become 0, K0, D0. Now there is a very strong probability on Monday itself, remember Monday itself, that we are going to see a reversal, a bullish reversal. This bullish reversal, most likely it will be a heavy bullish reversal. If the S&P 500 fails to give any good bullish reversal and remains red on Monday, then Tuesday, okay, either a gap up open or a good or a heavy bullish reversal, right? That is the thing. I hope now this thing is clear, okay. So if you're my Patreon community member, okay, then on Monday we will see, okay, what is happening, and if there comes a reversal, then what are the chances for the reversal and to what level it can reverse, because as of now there are very heavy, extremely heavy bearish sentiments, okay. That is why we are seeing, you know, back to back there's a fall, and we were anticipating, okay, a little reversal and then a fall, okay, but it gave very minute reversal, then it came down, and then again, okay, on this day it failed to clear this 4355, okay. Yesterday I mentioned this to my Patreon community members, that if the S&P 500 fails to clear 4355, it is not going anywhere, it will take a U-turn and it will come down, okay. And also it will not give up until and unless it clears 4330. Once it clears and sustains below 4330, then only it will go down, okay. Surprisingly, again it came down, it moved up, again it came down, okay. So bullish, we knew that bullish will be, you know, limited, and then it will be coming down. Anyways, so technically now I hope that this thing is clear, okay, on Monday and Tuesday, okay. Secondly, now yes, one more thing, this is regarding the levels, okay. So levels, let's discuss the levels. So levels means, as you can see, okay, this is the 200 day EMA, okay. But in case of the Dow Jones weekly chart, okay, it is already weak. Dow Jones on the daily chart, if you notice, it is already at this this the 200, very near to the 200 day EMA, exponential moving average, okay. That is going to provide support. Then we have Nasdaq, okay, and the ETF QQQ, and if you notice, again, okay, same story. And also as of now S&P 500 and the Nasdaq, okay, both are in terms of stochastic RSI, both are almost same, okay. But whether the reversal will be seen on Monday or on Tuesday, and the and this is the momentum of the reversal, okay, and exact level and this thing, okay, this will be known only when the stock market opens on Monday, and I will inform you, okay, if you're my Patreon community member, through the pre-market update or in the second update, okay. And guys, if you are not yet my Patreon community member, then let me tell you that how you can join my Patreon community. So guys, before that, let me tell you that when you join my Patreon community, then you get these the daily updates, the daily analysis of the S&P 500 from Monday through Friday, as well as the stock market opportunities in the premium stocks of the US stock market. So minimum 5 to 10 every week. So guys, in order to join my Patreon community, you can see that this is my Patreon page, okay, this is my Patreon profile, and I've given the link to my Patreon page in the description of the video and also in the comment section, okay. And so on this my Patreon page, you will see that there are these two tiers or two levels, okay. As such, there is no difference, okay, in these two. The only difference is the geographical location. This one is the daily S&P 500 updates from Monday through Friday for non-US and Canada residents. This is the daily S&P 500 updates from Monday through Friday only for US and Canada residents. So when you subscribe for either of these two, okay, then you will get the daily S&P 500 updates and the probable movement every day, Monday through Friday, as well as you will get this the stock market opportunities minimum 5 to 10 every week. And guys, if you notice that many people have joined my Patreon community for last many days, months, for many months, okay, and they are getting these daily updates of the S&P 500 from Monday through Friday, each and everything, as well as the stock market opportunities every week, minimum 5 to 10 opportunities in the premium stocks of the US stock market. So when you want to join my Patreon community, then I've given the link in the description of the video and also in the comment section. Now guys, I'm going to discuss the fourth and the last point of the agenda of this S&P 500 weekly technical analysis. And once again, okay, let me tell you that this the probable movement of the S&P 500 means what is going to happen in the S&P 500 exactly, in the Dow Jones, in the Nasdaq, and in the QQQ. Okay, so from this week onwards, okay, I will split it into two parts. Okay, so one part I'm going to discuss here, and the second and the most this is a critical part. Okay, that this will be published to my Patreon community in order to add more value to my Patreon community and to help my Patreon community members. So a few things that you must understand. Number one is that Thursday. Number two is Friday. Before that Thursday, number one is Tuesday. Number two is Thursday. Number three is Friday. Okay. Tuesday, okay, this is the technical part about the reversal. Thursday and Friday. Thursday, the GDP data will be published, and we'll come to know whether the economy is growing strongly or not. Because a stronger economy means that Feds will go, more bearish. Bearish means Feds will, put more restrictions, okay, in terms of the rate hikes, or will keep the rates as is for on these, highest levels, okay, for many months. Okay. So Thursday the GDP data will be published. Friday is the core PCE data. Core PCE data month on month it will be published. Okay. So in the Fed's projections, okay, Feds have projected that the core PCE will decline. If there comes any bullishness in the core PCE data, this means that month of November, okay, almost like confirmed. Okay, as the means these analysts and everyone, okay, on the Wall Street, they are expecting a rate hike in the month of November. Then this will be confirmed that there will be indeed a rate hike in the month of November. But then this will also open a possibility for the month of December. Okay, then in the month of December also we might see, okay, a rate hike. So Thursday and Friday, these 2 days will be highly volatile. Okay. Now other than that, Tuesday. So Tuesday, as I mentioned, okay, it depends. Tuesday, okay, Tuesday depends on Monday, that what happens on Monday. Okay. So Tuesday we are anticipating a reversal, provided that Monday the movement supports the reversal. If the reversal comes on Monday itself, then Tuesday now, okay, it will be tricky. Now so as of now we have seen that in the S&P 500 and in the Nasdaq, okay, and also in the QQQ, we have seen that the stochastic RSI is trading at saturation. But in case of the Dow Jones, the stochastic RSI is not yet saturated. This means that there are more chances that on Monday, okay, Dow Jones can give more bearish movement to hit its 200-day EMA. This is very near to its 200-day EMA. When the Dow Jones hits its 200-day EMA, okay, then only we will come to know whether a reversal will be there in the S&P 500 and in the Nasdaq or not, right? So primarily because and yes, one more thing, because as of now the K channel is not 0, okay, or the stochastic RSI. So this means that if the Dow Jones, okay, if it goes if it goes red on Monday, in that case we can expect that, okay, now the Dow Jones is 0, means the stochastic RSI is 0 in Dow Jones, and stochastic RSI is 0 in S&P 500 and in Nasdaq. This means that Tuesday there is very heavy probability that there will be a gap up open or bullish reversal, or even, or irrespective of any kind of open, there will be a reversal. Okay. So reversal to what levels, exactly what numbers, that I will discuss in the second part. Okay, now this thing is clear, right? Now in terms of the S&P 500, if you notice that as of now it is already saturated, but because the D is non-zero, this means that yes, as of now with the heavy bearishness and heavy everything, chances are that if the S&P 500 wants to give up, then it can give up more. Okay. However, the problem is that the 200-day moving average is like how much from here? It is 1%, 1.25%. The 200-day moving average is 1.25%. Okay. Seeing our a 1.25% bearish movement, it is possible. I'm not saying it is not possible, because the bearish sentiments are very heavy. It is possible. Okay. But the thing is that the Dow Jones is already very near to its 200-day this is the moving average. Okay, so once the Dow Jones hits its 200-day moving average, in that case the Dow Jones will find the support. Okay, and when the Dow Jones will hit its 200-day moving average, then the S&P 500 will be somewhere around here. Okay, somewhere around here. Okay, that we will have to see once it comes into the session. So when the S&P 500 is here and the Dow Jones has hit the 200-day moving average, and the Dow Jones gets a reversal, then the S&P 500 will not hit its 200-day EMA, it will get a reversal. Okay, as of now any reversal is expected to be up to maximum up to this the Ichimoku cloud. Okay, maximum Ichimoku cloud, but before that, okay, we also have these levels, okay, in between where the S&P 500 is expected to see a reversal. So you can say on an average, okay, this is not the exact level. Okay, exact level I will discuss in the second part. So the 4400 is that the level. Okay, you on an average plus minus 10 20 30 points. Okay, this may come. So it will actually depend that where these the moving averages are heading to, because any reversal will be limited to these the moving averages, right? And not just the moving averages, we also have these the levels here, right? Now once the S&P 500 gets a reversal either on Monday, if not on Monday, then you know what will happen on Tuesday. Okay, if there comes a reversal on Tuesday, okay, a good reversal on Tuesday, either in one day itself or in 2 days, 1 to 2 days, the S&P 500 will be able to hit these moving averages. Once it hits the moving averages, then it will be coming back. Okay, now comes Thursday. So Thursday the GDP data will be published. Is the if there comes like this indication that the economy is growing stronger, in that case, yes, the S&P 500 will give up on Thursday. This means that the S&P 500, if there comes a bullish reversal on Tuesday, very good bullish reversal, then the impact of that bullish reversal will be seen on Wednesday. And on Wednesday, if the S&P 500 doesn't give any good bullish movement, and also the S&P 500 remains hesitant to come down, then on Wednesday it will simply go sideways. Simply a small candle on Wednesday sideways. That's it. Because in that case, the S&P 500 and the entire US stock market will wait for Thursday to see what is happening in the GDP. Okay, stronger or better than expected this the GDP data means on Thursday it will give up. Okay, because the GDP data will be published pre-market 8:30 a.m. Eastern time, US and Canada. So the pre-market itself we will see a fall and then a fall. Okay, so I will tell you that what is this the percentage probability that we will see, okay, better than is, okay, these are chances that the GDP, okay, will give, okay, this the good results, okay, or the good numbers will be there in the GDP. Okay, other than that, okay, but we will stick to the technicals as we always do. Okay, so the numbers, the GDP data, this thing, that thing, okay, these are the secondary things, but the technicals, the levels, these are the primary things, because the stock market, entire US stock market, the Dow Jones and the Nasdaq and the S&P 500 moves through the technicals and the levels. Okay, even in the volatile scenario, when the technicals don't work as expected, then the levels work perfectly. Okay, and as you know that my calculated support and resistance levels are very strong. So in short, what we can say is that in the next week, in the coming week, the movement will be something like this. Okay, this is the most likely movement, okay, in the next week, right? Now there is there are chances, or there is the good probability, okay, because the K is 0, okay, for last 2-3 days in case of Nasdaq and in case of the S&P 500, but in Dow Jones it is not. But this is more than sufficient, okay, because it is already 0 in the S&P 500 and in the Nasdaq. This means that if there comes a gap up open, okay, on Monday, and the S&P 500 fails, if the S&P 500 and the Nasdaq, okay, these indices, if they fails to give any bearish movement, if there comes open equal to low condition, And the same thing I've discussed here, okay, in my final update to my Patreon community members yesterday, in the final update, even before the closing of the stock market. Okay. So if there comes this the open equal to low condition, opens immediately upon open, it moves up. That is the open equal to low condition. Okay. And it remains above the open price. Now we are talking about S&P 500, Dow Jones and Nasdaq. Okay. As such, we do not care about the Nasdaq because S&P 500 and the Dow Jones, they are the primary indices. If this open equal to low condition is seen in the S&P 500 and in the Dow Jones, in that case, what will happen? In that case, we will see that on Monday itself, it is sustaining. On Tuesday also, it can move up. It can move up to these the moving averages, okay? Or this is the level, okay, that will be somewhere around here, okay? And then it will wait. Most likely it will wait on Wednesday, and then on Thursday with the GDP data, it will give the further reaction, okay, bullish or bearish. Accordingly, okay, it will give this the movement. So guys, now I will discuss the levels, okay, the moving averages, the prices, and all of these are numbers and everything, okay, the probable numbers, okay, then the confluence zone, etc. in the second part, okay, that will be published to my Patreon community members. So if you have not yet joined my Patreon community, then you can join my Patreon community. I've given the link in the description of the video and also in the comment section. And if you have not yet subscribed to my YouTube channel, then you can subscribe to my YouTube channel. And as of now, okay, even without the levels, now you know what is most likely to happen and what kind of movement we are anticipating, a gap up, gap down, bullish, bearish, okay. Now you are very well aware of this particular thing. So for my Patreon community members, see, the second part is already included in this video itself. So the video that I published on YouTube covers only first part, but the video that I published on the Patreon channel, on this the Patreon channel, okay, this will cover the second part. And guys, hit like if you have liked this video, and if you have any question, then please feel free to ask your questions through the comment section. So guys, this was my S&P 500 technical analysis for the next week, that is from September 25th, which is Monday, through September 29th, that will be Friday. And now I'm going to discuss the second part of this, the probable movement.